You have been lied to about your credit score. For years, the financial industry has kept you in the dark, feeding you generic advice about paying bills on time, as if that is the only secret to unlocking financial freedom. You have been told that if you just work hard and pay your debts, your score will magically climb. But the reality is that the credit system is not a reward system for being a good person. It is a data-driven game designed by banks to determine exactly how much interest they can squeeze out of you before you hit your breaking point. Most people spend their entire lives chasing a higher number, never realizing they are playing by a rulebook designed to keep them dependent on high-interest debt. Today, we are tearing up that rulebook. You are about to learn the mechanics of the system that banks do not want you to understand, specifically how to manipulate the variables to your advantage without falling into the traps that keep millions of Americans stuck in a cycle of minimum payments and subprime interest rates. First, you have to stop looking at your credit score as a badge of honor. It is not. It is a risk assessment tool. When you apply for a loan, a mortgage, or a new credit card, you are not asking for a favor. You are entering into a transaction where the bank is betting on your habits. If you understand what the algorithm actually values, you can stop guessing and start engineering your profile. The biggest myth in personal finance is that carrying a balance helps your score. You've heard it from friends, maybe even from well-meaning parents. They say you need to keep a little bit of debt on your cards to show the banks you are active. That is a lie. That is a myth invented to keep you paying interest. Carrying a balance does absolutely nothing for your score. It only serves to increase your utilization and shrink your disposable income. The algorithm does not care about the interest you pay. It cares about your capacity to handle credit, not your willingness to pay the bank to hold your debt. Let's talk about the 30% rule, or as I like to call it, the utilization trap. This is where most people fail. You have a credit limit, let's say $10,000. You think as long as you pay it off by the due date, you are fine. But the bank reports your balance to the bureaus on your statement closing date, not your payment due date. If you spend $9,000 and pay it off in full, your credit report shows that you are utilizing 90% of your limit. To the algorithm, 90% utilization looks like financial distress. It looks like you are living on the edge of your means. It doesn't matter that you pay it off. The snapshot of that debt-to-limit ratio is what determines your score for the next 30 days. If you want to see a massive jump in your score, you need to keep your reported utilization below 10%. If you have a low limit, pay your balance down to a tiny amount, just a few dollars, 2 days before your statement closes. This forces the bank to report a near zero balance, which signals to the system that you have access to plenty of credit, but you simply do not need it. That is the ultimate sign of a low-risk borrower. Now consider the length of your credit history. This is the one factor you cannot fake. It's why you should never, ever close your oldest credit card account. Even if you don't use it, even if it has a small limit, keep it open. That card is the anchor of your credit age. When you close an old account, you are effectively shortening the average age of your credit, which can cause your score to drop overnight. The only time you should close an account is if the annual fee is eating away at your profit. And even then, call the bank first to see if you can downgrade to a no-fee version of the same card. Keeping the account history alive is far more valuable than the minor convenience of cleaning up your digital wallet. We need to address the hard inquiry trap. Every time you apply for a credit card or a loan, the bank performs a hard inquiry. This is a red flag. If you are applying for multiple cards in a short span of time, it looks like you are desperate for cash. It signals that you are searching for credit because you can't manage your current obligations. You need to be surgical. Stop clicking those pre-approved offers in your email. They are not special invitations. They are marketing lures designed to trigger a hard inquiry and lock you into a new interest rate. If you are going to apply for a card, do it with purpose, at a time when your utilization is low and your payment history is spotless. The most sophisticated players in the credit game use a strategy of credit layering. They understand that a diverse mix of credit, revolving credit like cards, mixed with installment credit like a small personal or auto loan, shows that they can handle different types of financial products. However, don't fall for the trick of taking out a loan just to build credit. If you don't need the money, don't borrow it. The cost of the interest will always outweigh the marginal gain in your score. Instead, focus on the fundamentals. Keep your utilization low, your payments perfect, and your oldest accounts alive. This is not about hacks or shortcuts. This is about being boring. The system rewards boring behavior. It rewards consistency over flashes of brilliance. Many people ask about credit repair services. Let me be crystal clear. If a company tells you they can wipe away your negative marks for a fee, they are lying. They are charging you money to send letters that you could write yourself for free. There's no secret back door to the credit bureaus. If you have a late payment or a derogatory mark, the only real solution is time and the displacement of that bad information with new, positive data. You can't delete the truth, but you can bury it under a mountain of better decisions. Think about your future. You are building a foundation. When the time comes to buy a home or start a business, your credit score is going to be your leverage. If you've done the work, if you've mastered these rules, you are going to be the one setting the terms. You will qualify for the lowest rates, which saves you tens of thousands of dollars over the life of a loan. That money is better off in your pocket than in the bank's vaults. The system is designed to keep you in the middle, to keep you paying interest, to keep you guessing. But now, you are not guessing anymore. You are playing the game with the same logic that the banks use against you. Keep your utilization low, protect your history, avoid the traps, and let time work for you. You are not just building a number, you are building your freedom. And that starts with the very next cycle statement. Stop looking for the easy way out and start looking at the data. The math doesn't lie. If you manage your habits, the score will take care of itself. Keep your accounts active, keep your balance invisible to the reporting cycle, and watch as the doors that were once closed to you begin to open. You are in control of the variables. Now, go execute the strategy.